Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap session for Thursday, March the 8th, 2018. My name is Doug McKay. I'm the founder of Quantum Leap Futures. Each morning we get together in these live go-to sessions to take a look at the market, macro to micro, take a look at the structure of the market, and then we drill down to our trade levels, our targets, and our hypotheses for the day. We do create multiple hypotheses. These are our trade plans. We do not know what the market's going to do. We create two main hypotheses based on whether the buyers or sellers take control, and then we create two alternative for expansion trend type scenarios. This is a subscription room. If you're interested in checking it out, send me an email at quantumleapfutures@gmail.com. There's no website, there's no blog. This is not a commercial venture. We do everything live here in the go-to in the pre-market session. Then we do live trading and analysis during the course of the trading day for our members. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. So yesterday, today is rollover. Okay, so everything I talk about today is going to be for the June contract. That is the ESM8 contract. There's going to be less volume on the M contract today, but it's enough liquidity that I can fill. And I have an issue with my IRT. It has a tendency to bring in the data on both sides if I don't roll before Thursday morning. So I have rolled. Unfortunately, I wasn't able to take a picture of yesterday's chart with the trade level results on it before it rolled. So unfortunately, I've got my chart showing yesterday's M contract, but and I've already adjusted my levels for today, but mainly our hypo one, and you can go to the video on the YouTube channel from yesterday. My main hypothesis was an open auction. It moved down into the 2700, and between 2700 and 2695, I was expecting buyers to step in and rotate us up and continue the auction up as a continuation. And for the most part, that's what we got. We moved immediately down to the 2700, 2705. The contango between the two contracts right now is 5 points, so everything's basically adjusted by 5 points. And we went up into the upper distribution and failed to close the gap the first time up, came all the way back down. Now it looked like we were going to get a neutral day with the break, and usually we would have at least poked through to see the neutral, and that didn't happen. The buyers defended that 2700, and then we rotated up and went up into closing the VPOC. Now this is just showing the M contract, I know, but the hypo is the same. It was just adjusted to the contango. So let's take a look at the news. Just move things over here. Taking a look at the economic news, we did have continuing jobless claims out. They were better than expected. They are expecting 1921. We only got 1870. Housing starts in Canada was a nice beat. Building permits as well. Draghi's speaking right now. He's in his Q&A portion of his conference. In 54 minutes, we've got Bloomberg consumer confidence. 10:30, we've got natural gas. 11 o'clock, we've got the Bank of Canada Governor Pelot speaking, and Bank of Canada member Lane speaking at 15:35 this afternoon. But other than that, there's really not a lot of news. So taking a look at the macro, I always like to start my day with a simple candlestick chart. I use a 9 EMA and a 20 SMA. What I'm doing is I'm putting myself in reference to where we are in the different time periods. And I start with a monthly and I work my way down. What I'm looking for is I'm looking at where are we within the trend? Do we have good slope and separation? Is price paralleling the 9 EMA nicely, or is it coming down and challenging the 9 or coming down and violating the 20 to see a possible trend change? Nothing changes on the monthly. The monthly is still very strong. On the M contract, where we want to start, worrying about a possible challenge to the trend is back down at the 26.35.50, basically 100 points below us. So the trend is very much intact on the larger time frame. And why is this important? Well, it's important to understand that even with the volatility and the range that we're seeing, the overall trend does not change. And so many people, they get their short bias as soon as they see a typical pullback, which is nothing. Now on the weekly, you can see that we are getting some weakness coming into the market. We came down and we broke below the 9 and the 20. It looked like we were going to get a trend change, and then they popped back up. But you could see that we're getting a bunch of inside weeks here. So, and we are, we have come down and challenged the 20, this week. So there is some weakness, but the overall trend on the monthly is still up. Going to the daily, you can see that we were starting to see the possible trend change, good slope and separation. Then they took it back and they failed, and it looked like we're going to break down. But here we are, right back above the 9 and the 20. We don't have a lot of slope and separation, so there is still weakness, but the overall trend is still intact. Then going to the 4-hour, you can see that the trend is in continuation mode. We moved down. We had a Mr. Sneaky right here inside bar, and now we're above the 9 and the 20, and we're getting some slope and separation. It's still weak, but it's intact. And going to the 30-minute, we did get a little bit of a push down on this last 30 minutes on the news, but they bounced right back off of the 9 EMA, and so far we're holding. Now we're losing some slope and we're losing some separation, but the trend is still intact, and I'd be watching the 27.30.75 on the June contract for the possibility that we could get some further weakness and a move back down into this 15 to 19 area. Right now, the micro composite VPOC is at 27.19.25. So let's take a look at the structure. Again, all these levels have been adjusted to the June contract. You can see that I've got a micro composite starting from the breakdown day, the day that we fell out of the balance that we were trying to hold up here. There should be a profile there. Why isn't there? Just let me draw one. So we were trying to hold value up here at the 28.32s, and we fell out, and then we had those huge days down, and then they came back, and we've been into this balance area. And the value area runs to the 54.75, 27.54.75. That's going to be an important level for us today. And down here at the 26.45.50, not likely going to see that. And the micro composite, or the most traded price, is at 27.19.50. There's also a significant HVN right here, which is our 2-day micro composite VPOC right here at the 27.31 area. So between this 31 and this 33 area, we've got a lot of price acceptance right there, and it's challenging. What I'm going to be watching for today is to see if this 27.19 and a quarter moves up on the micro composite, and we see the longer time frame, the price acceptance being accepted higher, and that will give me a clue as a continuation to come up and test the upper side of this balance up here at the 27.54. And you can see that is another area that we accepted price at the 52 before we gapped up and went and did the continuation. The all-time highs have been adjusted. We still have unequalized all-time highs. What does that mean? It means that we have a all-time high in the Globex, which is higher than the all-time high in the RTH session. The Globex all-time high adjusted to the M contract is 28.83.25, and the all-time high in the RTH is 28.80 1/4. Historically, those levels are adjusted. The RTH has a tendency, it's very, very rare to see that a all-time high is put in a Globex and not tested during the regular trading hours. So this is a clue that if we get out of this balance that we're in and come up and accept this higher microcomposite VPOC here at 77.50, that we're likely to get the continuation up into where the all-time highs are and possibly get continuation and the equalization of that all-time high. But that's not going to happen today. So I'm just trying to explain what that means. So right now, the levels to watch is obviously going to be between the 32 and the 33. If we can get above there, look for a move up into this 39, and then the possible move up into the 52, 54. If we don't hold this level, watch how they handle this 26.50. Below the 26.50, I'd be looking for a move back into that 19 level and back into balance and more chop in this area. The key line in the sand today is going to be down here at the 27.05 1/4. Below that, I'm looking for a bigger move back down towards this level right here, which is going to be in the 26.90, 26.91 area. So taking a look at the, come on, taking a look at the Globex. Our Globex is about 90%, 80 to 90% net long in price and time. We opened up, we came down and tested the HVN of the lower distribution from yesterday. We're unable to get below the 24 level. You can see we had a LVN here at the 23.75. It was also the value area low from yesterday, and then they basically came up chopped in this upper distribution, and then they broke out. And right now we're fighting the high of the day up here at the 35.25 from the RTH session. Very toothy profile. It's going to be toothy. Remember that during rollover, your delta is not going to mean a lot because there's going to be a lot of hedging and gamma scalping. So you're going to see toothiness because of the thinness on this particular profile. But the levels are still tradable. You just have to realize that you got to look at distinctive levels rather than the fact that you're going to have a whole bunch of LVNs and HVNs in distribution zones. So taking a look at the levels, the month open on the June contract is 27.23.75. That's going to be an important level. Our overnight low is just above it. It's also right there at the LVN. And I'm sorry, I said value area low. I meant the value area high and the IB high from yesterday. Below that is going to be our over under line is down here in this area. I'm not going to try to type it out here. Just understand that the month open is going to be our over under line. Above it, I'm still looking for possibility of longs into the overnight high and up into that 41.75 and possibly even up into the 52 area. Below it, then I'm looking to see rotation back down into the microcomposite VPOC down at 19 and a move down to take out the naked VPOC from yesterday. And then 2705, this becomes our key line in the sand. Everything below this, then I'm getting much more short in terms of a bigger move down and a possible trend change to the downside. So this is going to be our key line in sand. All right, so in terms of hypotheses, we're going to be opening up just outside of range or just inside of range. I'm not using the range high. I'm using the 34 as my my trade level. I don't think the 30. I think the 34 is more important than the 35. We're basically going to chop in this area because of the fact that we've got that price acceptance between the two level. But below the 34, then I'm looking to get short into the gap close down at the close from yesterday at 28.25 and look to see if we find buyers there. If not, looking for the continuation down to our over-under line down here at the month open and the overnight low. So Hypo 1 is open auction, out of range, a move down into the 29 and somewhere between the 29 and the 25, 24 area. I'm looking for the market to find buyers, base, and start working our way back up and targeting this 37.75, the range high from prior day, and possible continuation move up into 41.75. Now it is rollover, so I'm not expecting a huge amount of range today. Because we're going to get a lot of hedging going on. So I'm looking for maybe a 20 point to 25 point range. I mean, typically that would be a big range, but right now our daily average true range on the full session 20 period is 55.45. So it's come down because a couple of those one of those big days that we had 100 point range dropped off. So we went from yesterday having a average true range 20 period full session at 61.54. We've come down to 55.45. So off of the overnight low so far, which is at the 24, 27, 24 and a quarter, our upside daily ATR 27, 24, and I forgot to do this earlier, 55.45. So our upside daily ATR is at 27.79.75. Come on. So what is that saying? It's saying that if we get into a trend scenario, we have the capabilities without expanding the current volatility range to get up here in that 79, 75 area. And off of the overnight high, and that overnight high, has it changed? 39? No. So off of the 27.39 minus the 55.45, we have the capabilities of going down to 26.83.55. So if we get in a trend scenario to the downside, we can have the capabilities of going down there and getting below the 2700s and coming down into that 83. So again, Hypo 1, open auction, just out of range or just in range, a move down into the 29, maybe even to the 24 area, finding buyers down here, basing, rotating up, and continuing the auction up towards the 41.75, maybe late day probe up into the 47.52. That is Hypo 1. Hypo 2 is the opposite. Open auction, out of range, take out the overnight high, and then somewhere between 41 and 47, looking for responsive buyers or sellers to step in, rotate us down into the lower distribution, chopping and closing the gap, and then coming down and testing this 24 with a late day probe down into the 27.17. But then I'm looking for a base again, and basically to close somewhere in yesterday's range, probably right around that month open or the microcomposite VPOC at the 1950. So that's hypo 2. Hypo 3 is a gap and go day, a open auction out of range, or an open drive, or open rejection reverse, and leaving the gap open, coming down, testing the range high from yesterday, failure to get into the hold inside of the range and close the gap, and then a move up into the 52, chop in the 52, break out of value and go back into price discovery higher and push up into this 75 to 79 area, and then closing somewhere up in near the highs as a gap and go day. Hypo 4 is a breakdown day, a open auction just in range or just out of range, take out the overnight high, find sellers right away, move down into the month open, fail, come down here into the 17, and then get a continuation wave down to test the 2700, possibly even late day probe down into the 91.75, and I'm expecting to close somewhere down here, around the 2700. So those are my four main hypotheses for the ES. Taking a quick look at gold. Gold continues to hold. Come on. Above the microcomposite VPOC here at the 23, 24 area. We've been fighting this area. We've been watching the 28.20. That has been shifted now to the 29.50. So anything above 29.50, I'm looking for a push up into the 32s and into the 39s. If we hold below the 29.50, then I'm looking for a move back to the 23 and possibly push down into the 19.18 area. Anything below 14 brings in much bigger weakness and we move down. But usually during rollover, we're not going to see a huge move in gold. So I'm really expecting gold to chop between the 31 and the 20 area and just basically going sideways here. Anyway, that's going to complete our pre-market session. As always, trade well, trade safe, and catch you on the flip side.